So we're going to take a look at a little bit more data here as we look at the market for loanable funds. And one of the things that affects the demand for loanable funds is investor confidence. This table gives us an indication of what investor confidence looked like through most of the 2000s and into the 2010s. So you see over here at the beginning, investor confidence took a dip, and then we have this recession, very brief recession. This is, of course, right after 9/11. And there are some dips, but generally investor confidence was moving upwards. And then we see this this period right in here as the financial system is getting a little dicey, and then we see this huge big drop during the heart of the financial crisis in the 2008-2009 time period, the Great Recession time period. But then it goes back up, and it's pretty steady. There's some ups and downs, but it's sort of, if we draw a trend line through this data, it's relatively consistent right through here. And then we have this decrease here in the late 2018 into 2019. Part of that had to do with trade wars with China, and then it looked like things were on their way up. And then COVID-19 struck. So let's see what that looks like with the data. And the data shows us, if we trim the timeline down here, we see that in 2017, 2018, we start to see this drop again. That's trade war, and then boom, we see this big drop here in early 2020. That's going to be a bad sign, or that is a bad sign for the loanable funds market, because we should see demand for loanable funds decreasing. That would shift the demand curve to the left in the loanable funds market, and there will be a lot less investment. Interest rates will be lower, but with less investment means that there will be less economic growth in the future.